The S&P 500 and the Nasdaq 100, we had the biggest probably day over the next 3 weeks that just happened right now. FOMC, Powell made his decision, and ultimately we had a push down. Now, I do believe today was one of the more deceiving days or FOMC meetings that we maybe had. Now, the expectation is that it was a 0.25 hike, but I believe there was a lot of emphasis or maybe hope on the idea of a pause to come down the road. Now, Powell didn't say those words, but I think and I believe that we're leaning towards that in the near-term future. We look at something like the ES, and when we look at the entire market, what have we been saying for the past 2 or 3 weeks? Yes, we love the breakout. We want to play the upside. That's what we're looking for. But what are the major points in the market? With the S&P 500 specifically, the ES futures, if you will, 4,100. That's your line in the sand. If you break below that, you hold below that on a daily time frame, you're looking at pretty heavy downside in the market. You're looking to be a bear. That's where you turn bearish. Now, giving you a visual, so for everyone asking and saying, like, well, Tyler, this is your drop. You're so bearish. This is so terrible. Do we not remember a year ago, when things were actually bad? We go back to August with Jackson Hole and the massive drops we had. We go back to March, when rates started getting raised again very high and quick, just dropping, massive drops. But now we're consolidating sideways, and it's like we forget where we've been. We forget the overall trend in which we're trading. And as you can see here on higher time frames, we continue to make higher lows. But nonetheless, like we said in yesterday's video, you were at a major inflection point, to say the least. You can see this level here on 4,100 to 4,200 has been a massive line in the sand that we've basically been holding below, especially the $4,200 level. So until we get above 4,200, there's no reason to rush into calls. There's no reason to say the bull market is here. But as we look at the current trend since October, over 6 months here, it has been to the upside with higher highs and higher lows being established. That's what we know for sure. Now, I want to take a little bit of a deeper dive. I want to take the next step, if you will, into the market and kind of how we're moving here. We go into the Nasdaq. We get a visual here. Now, the Nasdaq is even more bullish, in my opinion. You can see the clear trend towards the upside. Some people would say you're making a bear flag. Now, I would disagree personally because you just continue to move up and you've broken some of the previous local highs, specifically 12.8. That was a major point there. And we continue to make higher highs. Even today, you made a higher high. And you continue to make higher lows. So until you can establish a lower low, you can't really look at downside. But even that being said, we look at something like the 4-hour time frame, and you're holding every level we've mentioned. Specifically going back into where? February highs, 12.95, 12.9 flat. You're holding above that, and you're well above that. So what do we know right now? Despite the market pushing down, we know the Nasdaq and tech are remaining resilient, remaining strong. They had monster earnings, and that momentum looks to carry on. Now, we have a few sectors like the ES and Dow getting hit today. But in my opinion, you're still in the range. There's still no reason yet. You're close. You are close to looking at the downside, but I don't think you're there yet. Now, before we rush into that content, I ask you to do two things. Consider liking and subscribing. Every single day here on the channel at Option Drops, we provide you a fundamental and technical analysis on the market, so you never are taken by surprise and you always know what's on the horizon and to come. Today, we expected a 0.25 hike. We are leaning more towards a pause to come, and I'll give you my logic behind that. Also, too, if you're into short form content, the Instagram link is down below. We just hit 1,000 followers in like a month and a half. So really do appreciate all you guys for supporting us. You guys really do help us out. And we have some of the best, overall subscribers there are actually. But if you're interested in getting involved with a bunch of traders like yourself, this is not a signals group. This is an area for traders to, one, work together towards a like-minded goal and also understand the market better and better every single day. My goal every day as a trader is to get 1% better. We provide our trades, we provide our analysis, and we answer and help you guys along the way as well. But it's going to take you to that next level. So if you're interested, the link is down below. Make sure you check us out. Let's get into the video. Now, looking at Nasdaq, looking at a few things. We'll go into the technicals here, but overall, as long as you're above 12.95, you look really good. As long as you're above 4,100 ES, you look phenomenal. The end. That's the story there. Now, going into what happened with the Fed. Okay, so this is the Fed statement. The link will be down below if you want to check it out. Now, the whole the third paragraph, everything else, basically just says that they are focused on getting down to 2% inflation, the end. Above this is where things are interesting. The first sentence is basically just about what's happening with the market and kind of the concerns there. The second paragraph or second sentence tells us more about what they want to do. The banking system is sound and resilient. This is what we thought they would say. Show confidence and strength in the banking sector. Tighter credit conditions for households and businesses are likely to weigh on the economic activity, hiring, and inflation. We'll come back to that. The extent of these effects remain uncertain. The committee remains highly attentive to inflation risk. So now they're pushing and introducing this new idea we've talked about, raising credit conditions for consumers' use specifically. Now, they did not say a pause is coming. I want to highlight that right now before I even go any further. People try to say that I said that. They did not say that. But we go to something like Twitter and we look here. Let's identify some of the focal points of what Powell said. Shout out to Financial Juice. They kill it all the time with this. Powell's specific words about what they're focusing on with the Fed. It's not rates right now. This is their words. The Fed's attention will now shift to credit tightening, right? They're going to continue to reduce that balance sheet, but credit tightening. Very interesting statement. A very, very interesting statement there. A little bit further, what else did they say? These are the last two things I want to cover here. There is a sense that we are nearing the end rather than the beginning. We feel like we are close, if not, or even maybe there. What are they talking about? They're talking about interest rates. That's what they're talking about. Possibly being as restrictive as they need to be. They've also discussed that they need to start pausing, like we mentioned in yesterday's video. So again, was this necessarily the most bullish meeting possible to where they said, look, we're pausing, inflation looks good? No, it wasn't that. We talked about in yesterday's video, you should rewatch if you need to, that core inflation is still a big issue. They really didn't talk about that today. We talked about the possibility of moving towards credit conditions and focusing on that rather than raising rates higher and higher and higher. It's right there in front of us. And now they're even giving you the hint, and they're not going to, Powell is never going to say, guys, we're pausing next quarter. We're going to pause at the next meeting. Because if he does that, he's stuck. Okay. What if core inflation comes out really bad? What if energy prices spike and inflation goes crazy and PCE is terrible, right? You just don't know. So as the Fed, they can't lock themselves into that decision. You have to understand that. If you don't understand it, then I don't really know what to say. So they're never going to say that. And even if we come out next meeting and Powell says, we're pausing, I guarantee you, screenshot this, quote it, clip it if you need to. He's going to say after it, this all still depends on data incoming. He's going to continue to say that because they have to be flexible. And that's the whole point of even getting to a pause. And so they can look at data and see what's happening. Again, like we mentioned in yesterday's video, watch what's happening. If inflation actually continues to drop or if it starts to rise again, they can start raising once again, getting closer to 6%. But there's no point in continuing to do this when what did Powell say? Despite them raising rates continually, unemployment continues to drop and wage growth continues to rise. Even though wage growth is slowly, it's calming, but it's still rising nevertheless. So that's my opinion there. Now, really quick, looking at Bookmap as well. This is, order flow, what's happening here on the market. Yesterday, if you paid attention, you saw a lot of that buying pressure across the market. Now, again, people establish their position typically not the day of. That's just food for thought. This morning, we saw a little bit of selling, but there was pretty minuscule orders. All throughout the day, minuscule, nothing big really coming in here. Volume was pretty dry. Once the meeting started, you did see one big seller come into a position around 2,800 lots. That's a pretty large position, just to let you know. It's a decent, fairly sized position, okay? But nevertheless, that was the only order on the day, and you started pushing back down. You ended the day down here near 4110, 4105. Now, again, what do we want to highlight at this level? We go to ES, and again, I have no skin in the game right now. But what's the point of this $4,100 level? I'm just saying, you've bounced continually. This is a daily time frame, okay? Not the greatest candle, not the strongest. I'm going to say that right now. But if you can hold this level again, there's no reason to go short yet. If we get below 4,100, you have every reason in the world to go short. It's the easiest short signal, in my opinion. So for right now, I think that for me at least, it's to just relax, let the market play out, and just go from there moving forward. You need to see the reaction to this level. If you remain above 4,100, I'm sorry if you're a bear, but you're still bullish. Again, if you actually can hold below 4,100, we have to talk about targets from there. And that's where you will make your money. We've seen there's a lot less liquidity down here than there is in this range right here. Okay. So we go towards this and we can look. You have the weekly 200 SMA near 39.82. We can also turn on what's happening there with the daily, which is more influential in my opinion. Actually, this is the daily, and I think your weekly is even deeper down as well. It's not pulling up right now. Your weekly, I was on the monthly. So as you can see here, your weekly is even deeper. So your daily is right there, and that'd be your first target if you break below 4,100. Okay, that's a clear 130 points down. So if you actually get a hold there, that's what you would be looking for. So there's no reason to jump the gun and try to trade 30 points of downside where you're at now. Personal opinion. Nasdaq, you're still almost 200 points away from even getting close to your major resistance on there, 12.95, which we've been talking about. So I don't even think there's a reason to start talking about that level yet. My personal opinion. There's no signs yet. There's no reason. Again, I do believe you have the possibility, you have the case to potentially to start dropping, but there's no reason to force it. It's like I keep saying, this is where you lose your money. When you range trade and chop, you make your money on the breakouts, right? Where did you make your money on the breakout to the upside? When you broke out of the trend and you moved up. When you broke above highs at 12.95 and you pushed up. That's where you made your money. You can try to scalp this all day if you want, but I'm telling you, this is where traders, specifically swing traders, lose their money, is because they overtrade in the chop. Okay? So I want that to be clear. I want that to be understood. That's my viewpoint here, right? Again, what has to happen to be bullish? You really get that hold above 4,200. What has to happen to be bearish? You get a hold below 4,100. It's that simple. As long as you're in this range, there's no clear direction. We understand it's a massive resistance. We understand where you're at as well. If we look and take a deeper step back, in my opinion, if you were really quote unquote that bearish, I personally believe you would have got rejected a little bit harder right now. But we won't really know until you get below 4,100 to see if bears actually step in. That's where bears will step in, is if you hold below 4,100. And it will be aggressive and it will be quick if you can hold that level. I can't say this enough. Okay, I can't. So you have to understand that. Now, looking a little bit deeper here at volume as well. Volume was actually okay today. I'm going to tell you that right now. It wasn't that bad. 88 million. I think your average day is like 92, 93. So you're damn near close to that. Volume definitely flew into the market after, the FOMC meeting. Worth mentioning there. Going into some of the order flow here, right? SPY. A lot of puts established, okay? A lot of block orders though, right? Okay, you had a few as well, but none of these are really that short dated. They're pretty far out. You have some Junes coming in, but that's about it. Nothing crazy yet. We need to start seeing what's happening with this chain and being established. Qs. A lot of Octobers, right? Shorter dated ones show more confidence and more direction for yourself. Okay. Understand that as well. VIX. Nothing really happening here. That's where we're at there. Go look at VIX. Yeah, you're bouncing a little bit, but you're still in this 18 range, okay? We need to get back above like 19 to really start pushing back up to be concerned. And 24 is where we really look for downside pushes, in my opinion. But we're still trending at lows. Worth mentioning. We look at the dollar. A lot of people have become little dollar warriors. That's what I call y'all, right? We're dollar warriors. The dollar has probably not looked this bad in a long time, okay? The dollar, you're sitting at lows. The weekly candles are disgusting. You're still pushing down. You don't look strong, but you're at support. So I wouldn't really say the dollar is a short by any means. Your next level to test is going to be down here. And that's around, $3-4 of downside. I'm going to tell you right now, the dollar looks pretty abysmal. We look at yields, what's happening with bonds. Again, they still look like they want to drop. Going to tell you that. Despite raising rates, in my opinion, the bond market is expecting a pause. The bond market is expecting a slowdown on these yields. Gonna tell you, that's my opinion. That's how I view this. So when I look at this right now from my perspective, again, nothing has changed. Everything that we've talked about over the past week or so and expectations are playing out right now. My opinion, don't shoot the messenger. So that's where we're at here. That's how we're moving. I don't want to go super in detail with too much here. I have to get back. We're doing a webinar in Discord today, but I want to let you guys just understand my viewpoints here. If we look at really what the Fed is saying today, it's a lot of what we expected. Maybe it isn't as crystal clear as we would have liked as far as them saying, look, we're getting a pause next month. But I don't think they were going to say that. We were looking at hints. We were looking at them to start talking about this, right? And I think you got that. If you want to look at all their little, the bullet points, Financial Juice on Twitter has a lot of it, okay? I follow them, so you can just go look there. But again, this is where we're at, okay? And this is how we're moving. So again, this is my opinion of where we're at and how we're going to move going forward. Fed Powell, avoiding a recession is more likely than experiencing one, his opinion. Because we have all these banks saying that we're going to go into a recession. So it's just, again, I think we already hit a recession, but, sue me, who knows? This is just the overall viewpoint of where we're at. And again, Powell keeps saying it, perhaps not far off from a sufficient restrictive level. He is hinting that we're at the top on these rates, or we're at least very, very close. He continues to say the same thing. Again, though, he did say it's all dependent on data and what comes in. So if core inflation comes in really bad or starts to rise again, I think they probably raise rates again. But we won't know until that data comes in. But right now, if data comes in good, you will see the largest expectation of a pause moving forward. As long as data comes in lower, right? Going into as well, the last one we'll cover here today, energy. We look at oil. Massive drop over the past 3 days or the last 3 weeks, right? We hit that 200 SMA, came crashing back down. Another great sign for the energy reports and the inflation reports. I'm just telling you, right? I believe there's fundamental issues in the market, but we cannot ignore what's right in front of our faces right now. See you guys tomorrow.